Hey, good morning. Let's go over today's trade plan. So in the overnight session, the sell side has been dominant and ES has been trending lower. Heading into the open, the 26.5 to 29 area is going to be used as support, as well as the micro bull bear zone. As long as buyers can hold ES above 26.5 to 29, there's still potential for the market to continue balancing within the recent range and return back up to 35.37 and the top of the balance at 40.25 to 43.25. And in the event that we are seeing excess weakness and sustained downside momentum, and we break down below 26.5 to 29, that would confirm the sell side in control and bring the 23 gap, 20 half naked VPOC, and the 1675 to 1875 support zone into play, where responsive buyers can then be active yet again, and the larger time frame support continues to be 0775 to 1075. So off the open, really how the market responds to 26.5 to 29 is really going to help set the bias and tone on the day, and we're using that area as the initial support as well as the micro bull bear zone. On the upside, the 35 to 37 area marks the high volume node of the current balance as well as the previous VPOC and close. Now that is the middle of the balance essentially, so it only makes sense to short that area if we are seeing a lack of upside momentum or a bearish disconnect on the underlying internals, because in a balanced environment, the middle of the balance typically is a chop area. So 35 to 37 would only make sense as a short if there were signs that the market could still break down below 26.5 to 29. But if we were seeing underlying strength and decent upside momentum, then 35 to 37 may not hold, and ES could then test 40.25 to 43.25, where sell side could still defend and be active. And in order to break out above 40.25 to 43.25, we will have to see broad market strength, the other markets also participating in the upside, and sustained upside momentum. So the market is stuck in a range. It's in a very balanced state. Our short-term bias is neutral, and in order to break from the balance to either side, we need to see excess in the underlying internals. So to break down, we need to see a lot of weakness and sustained downside momentum, and to break out above 40.25 to 43.25, we would need to see excess strength and some pretty decent and sustained upside momentum. Otherwise, the market can continue to balance within a range. So that's really how the context is set up heading into the open. Like I said, the overnight session has been bearish, and the market has been essentially trending lower. So we just now have to see whether this 26.5 to 29 is going to put a stop to that trend and turn things around, or whether ES is simply going to continue and break below 26.5 to 29, in which case the next decent area of support is 1675 to 1875, and then the larger time frame support would be 0775 to 1075. So those are our main ideas heading into the open. Let's see how the market responds to the 26.5 to 29 zone, and we'll take it from there.